So similar to a traditional stock exchange, OTC Markets has three primary businesses and different constituents for each. So first and foremost, we have a trading platform. It's what we call a super ATS, which is an interdealer quotation system where market makers link electronically to trade the securities that are quoted on our market. That trading creates data, so our second business line is a market data business. And then third is our corporate services line, which has companies that go out of their way or choose to have their shares quoted on our OTCQX and OTCQB premium markets. The corporate services, the main client obviously is the issuer, whether it's an investor relations CFO, CEO. Market data, the clients would be your Bloombergs and your Reuters, anybody that consumes trade data. And then, of course, our trading services business are the market makers that are quoting those securities. Most of our business is subscription-based, which is great for recurring revenue and cash flow. If you look at our three business lines, it's split roughly with about 43% being corporate services, 40% being our market data, and the rest being the trading services business. For foreign issuers, listing on a national exchange like the New York Stock Exchange or Nasdaq can be incredibly costly and duplicative. If you're already listed on a London Stock Exchange or a Deutsche Börse, to have to go out of your way to be listed on another exchange requires reconciling to US GAAP. It increases your risk and exposure by being Sarbanes-Oxley compliant and SEC filing. The advantage to our market is we give companies that are already listed on a foreign exchange the ability to have their shares traded in the US without having to go through that costly and duplicative reporting process. Companies can do this through an SEC exemption. It's called 12G32B, and it allows them, as long as they provide in English anything that they give to their home market regulator, to have a traded security in the US. So unlike traditional exchanges, companies that trade on our platform are required to get state securities regulation in place. That means that individuals in those states will be allowed to trade securities, broker-dealers will be allowed to solicit them for those securities. So it's important that if you're not going to be listed on a national exchange, you get blue sky exemptions in as many states as possible, because that just broadens the universe of people that can trade your security. In the last couple of years, the OTC Markets has endeavored to get blue sky exemption in as many states as possible, and we're in the high 30s and counting. So it's important for issuers because, again, you want to have retail investors be able to buy your securities in those states. We will continue to look to get 50-state blue sky exemption, and that's a primary strategy of ours going forward. Regulation A+ is really a Canadian and US-based regulation that looks at crowdfunding. It's the result of what we call the Jobs Act. And it gives companies in the United States and Canada the ability to raise money up to $50 million, basically through the crowd. It can be online, it can be through a broker-dealer, but it's just another tool to allow early-stage growth in developing companies the ability to raise money through the crowd. We continue to want to be a market where companies can be traded without the cost and complexity of an exchange listing. That continues to be our strategy, to provide companies with the tools to be public companies without, again, that cost and complexity traditionally found. So the things that we do will continue to provide value to companies in a cost-effective, elegant manner.